everyone. Hope you're enjoying LeWeb. Certainly a little bit warmer this year. My name is Mike Butcher from TechCrunch, and you've had your panel introduced to you. It's relatively simple. We have Eric, then Jeff, then Albert, then Bernard, and then Megan. And you can read their biogs on the on the website. Let's get straight into it. Apparently, this is over. You're all dinosaurs, quite good-looking dinosaurs, I might add, but you are dinosaurs, and we don't need VCs anymore. Who wants to take that? We have crowdfunding now. We have companies raising money via all sorts of online platforms now. Seed is in the UK, for instance. We don't need you guys. Who's going to take it?
So the endangered species had to go through a 15-minute makeup. Just as a backdrop, crowdfunding has essentially replaced one thing, which is the friend and family round or the pre-orders. Earlier on today, James Park from Fitbit sort of suggested that if he had had a Kickstarter when he started Fitbit, he would actually have tried to take pre-orders to validate with the investors that there was demand for this product. Instead, he actually had to convince True Ventures and I to take our money, to actually invest our money and get him going. So I think there's a very specific place in the ecosystem for crowdfunding. It is not replacing VC money, which is there to prove the business model and scale.
Eric, Bernard, you famously backed Bebo and Michael Birch. Do you think he could have got that off the ground without you guys?
It's hard to say, but I think we provide some value along the way. I hope we did. What I can say is that we have the biggest deal flow now that we've ever had. So I think if you're focused on the early stage and venture capital in Europe, you have a tremendous amount of potential entrepreneurs coming to you, and we've never seen that before. So I think our business is going to stay for a long time. I think we have to evolve because I think they are indeed a different kind of ecosystem. They are more smaller and slightly bigger, seed money coming into the play. But what it forces us to do is to provide more value. And I think that's what entrepreneurs want. They want money, a certain amount of money, and the ability to have people who stay with them for the long run. But it's true that we have to continue to be better and better at what we do, and entrepreneur expects more than money.
Megan, on Kickstarter, Pebble famously raised $10 million right off the bat. I'm sure you have a view about this at Kleiner Perkins.
You know, I go some with what you just said right now, which is money is only part of it, right? The check is really the beginning of the relationship with venture capital and entrepreneurs. At Kleiner, we see ourselves as getting involved in the building of a company with an entrepreneur. So a lot of the times, money is the easy part, and it's building a meaningful company and product and business over time where we believe we really add value.
Eric?
I think there's a good reason why the VC industry and the VC firms have evolved over the past 40 years in what they are. It's basically a team of people, and the team part is the most important. Team of guys who have exactly aligned interest to work together as a team and bring, typically 100 to 150 years of experience as entrepreneurs and former entrepreneurs, and having guided other companies to success, and put that to work to guide the new entrepreneur to success. So I think this, this idea that you can replace a group of people that have done that for a number of times together by just a random number of people who may have very different level of interest, agendas, and so on, is not obvious to me. It's still to be proven.
Albert, at NYSE Euronext, I mean, it's obviously not crowdfunding, but it's a public markets. But what do you guys have a view about how the nature of late-stage venture capital is operating, when it gets closer to your market?
Well, I mean, we don't have an institutional view per se, but what we can see is companies that are considering IPOs, even at the US market, which is above a certain level, typically for an international company, and for certainly in the European market, are all are all being pursued by late-stage funders, VCs. So, in a way, if I wanted to be slightly controversial on this panel, I would say part of the VC market is essentially pre-IPO funding today for some of these transactions. So we know companies, some of these companies will ultimately come to market. They sometimes consider coming to market, sometimes they do, sometimes they end up being funded by late-stage VC. So, and that is from the bankers, if you like, point of view, which is my background. I don't think we saw this a few years ago when I was out in the trenches in the banking. So I think there was another class of investors who provided pre-IPO funding, and I certainly see VCs playing this role today.
Let's get into some of the IPO stuff in a minute, but let's talk about some of the issues that people are talking about at the moment, like this Series A crunch, which seems to be coming up as an issue, certainly on the blogs. I mean, are we seeing that? I mean, is it kind of a seed now kind of done, and a lot of companies out there are going to be unfunded, kind of dropping off like flies in the next 6 months? Megan, do you have a view?
Yes. I think we're seeing a fairly predictable and natural evolution. It requires less capital than ever before to start a company. There's lots and lots of seed investors who have funded thousands of companies that just won't reach venture stage and venture size. And the very, very best entrepreneurs and the best products and the best businesses will continue to get venture backing, and the rest will return to the ecosystem in a way that's very, very natural and actually, I think, overall good for the industry.
Do you guys see similar things going on in Europe, for instance?
Yes, I think it's exactly the same in Europe. We clearly don't have a drop of seed funding. There's a lot of seed funding. That creates a much larger group of companies who have been funded at the seed level in Europe. But then you don't have naturally a much larger number of companies that make it in terms of Series A grade. So the ratio seems lower, but the raw number of companies is not much different from before.
Jeff, you're a player in Silicon Valley. What's your view? Do you see that happening a lot at the moment? You do a lot of seed yourself. And, are you happy about that situation?
I don't think it's a question of being happy or whining about it. It's always been a case that when we invest, we assume that statistically we'll lose 20 to 30% of the companies. Some when they go from seed to A, the others from A to B, and then typically if they go past the B, they have a good shot at becoming successful. The challenge today, the one challenge is, like Megan said, great companies will get funded, multiple term sheets, no problem. Crap won't get funded, it's always been Darwinian, no problem. The issue is this sort of middle tier of good companies that would otherwise have gotten the attention of the VCs, who might need a couple of months of due diligence to figure things out and then get funded. Today, there is so much sort of inbound interest from startups to get funded, the VCs don't have the time to dig in. The example I gave to a journalist a couple of days ago is we got the Series A of Fitbit done in 2010, and it required a fair amount of work from myself and the other co-investor, John Callahan, to get that funding happening. If it was happening today, even with our great relationship with the downstream investors, I'm not sure that they would have taken the time to analyze Fitbit's potential and invest that $9 million that a hardware play required. And Fitbit is crushing it, as we've seen, but that fundamental, I need to spend the time to understand the fundamentals, is something that people don't have the luxury of doing today.
Go ahead.
A couple of points on this. To me, there are two sides of this equation. First, the entrepreneurs, do they need more or less money at this stage, at the Series A stage, or is this do they not need it at all? Or on the venture side, is there not enough money to provide here? My view is that on the entrepreneur side, there are a certain type of companies that can do a lot more with less money than before. But that's on the internet side. Really developing an internet service can be quite quick, and you can get to a point where you're going to skip sort of Series A. You're going to go from seed to like a very large funding round. And so you need a lot of money. I mean, you see the types of round that we see today at 40 million, 50 million, they're quite remarkable. So I think on the internet side, right, consumer internet side. Now, if you take an enterprise software company, I think you still need to go through the same phases as before. And actually in Series A, you probably need a little bit more money than before because the revenue generation is slower than it was before. Now on the VC side, I would say in Europe specifically, there's not that many funds that really focus on Series A that are pan-European. Just basically a handful. And there's been a lot of difficulty for funds to raise money in general because returns have not been very good in Europe. I think that's the reality. But I think there are enough firms like ours or Wellington who are willing to give money at Series A, but we're highly selective, that's for sure.
Talking about the exit markets, for instance, and getting that liquidity back into the system, we've seen the IPOs of Facebook and Groupon and etc. Recently. What's your view? What's the panel's view about the cycle? Is it the start of another cycle now? Is the exit market closed now for a couple of years? Megan?
Well, I presume you're talking about consumer because there have been some very successful enterprise IPOs just in the last couple months, whether it's Palo Alto Networks or Workday.
Yeah.
So I don't think the market is closed for internet IPOs whatsoever.
Not at all, of course. That's enterprise, of course, is very much kind of coming through the system now, much more of a theme going forward. What do you guys think?
I'll say just one thing. If we speak specifically about Europe, because I think our issue in Europe is there's not many exits that are purely Europeans, right? So if we look at our portfolio, we've had maybe 15, 20 exits. We've had, out of these 20, I think it's been maybe 5 IPOs, and the rest were M&A transactions. All these M&A transactions were done in the US, all of them. And the IPO, there's been a couple in the US, one in Hong Kong, one in Milan, but in general, not enough. I think where we would like things to be, first of all, is the reverse, is to have 15 IPOs, 5 M&As, and to have these IPOs being done in Europe. Because what's missing here are large companies. We are not yet building what the Nokias were, or what the Siemens have been, or the SAPs and so on. We need to build these large, sustainable, long-term European companies. That's what will give us the ecosystem to, in itself, buy some European companies and get more spin-offs and so on. Right now, we always have to look for the things on the other side of the Atlantic, the exit on the other side. And I think if we want to have a great, vibrant ecosystem in Europe, we need to have entrepreneurs who are really willing to build very big, very long-term European companies. And I think we have some potential.
Eric, you've been in Berlin for a long time. You guys have been seeing a lot of companies come through the Berlin ecosystem over the last few years. Do you feel that we're getting to a stage now where we're going to get those larger European tech companies?
Well, Berlin is a great place. I think there is an ecosystem that's being built that will generate, because of the critical mass of people and people interacting with one another, it feels like Silicon Valley in the mid-1990s. Now, before we get to getting a few Yahoos and Googles and Facebooks out of that ecosystem is going to take a few years. So what Bernard is referring to are the companies that can be what I call monster companies, very sustainable, super profitable companies that become the aggregator of a new market. And there, I think we are just, for the first time, seeing them coming out of Europe. It's going to take another 2-3 years. I like to think that Spotify will be an aggregator in the music area. But we're still a couple of years away from having that.
Albert, there's been some recent moves in London by the British government to create more of a facility for companies to IPO out of the London market. What's your opinion about some of those legislative moves to create more of a NASDAQ-style market?
Well, I think that the way I have read this initiative, I'm not sure how it started, but how it came out, it was the cry to reduce the free float requirements in London. And if you ask me, do I believe in that? I don't. Because there are plenty of markets, including our own European IPO market in London, Euronext, that practically, technically, it does have a free float requirement, but practically it doesn't. And in fact, we had 9 technology IPOs, more than in London, down on the Euronext market here. So the free float requirement in itself is a bit of a red herring, and I suspect a little bit cynically that it was hijacked by the city, if you like, that is resources-oriented exchange, if you like, and it's more useful perhaps for emerging markets companies that want to come to London and corresponding corporate governance concerns, of course. But coming back to the technology market, the issue, of course, is the build-up of the ecosystem. I'm not sure I agree wholeheartedly or fully with the lack of large companies is really the main source of the lack of the ecosystem. Because we do have some large companies here, maybe not as many, maybe not as huge as in the US, obviously, not the Apples, the Googles, but you've got the STM Micros, interesting company in the news. We have interesting companies. But the overall volume, I think, of the market is incomparable. And the European market is more or less closed right now for IPOs of any kind. That's another thing to consider. If you compare US with Europe, which is a great comparison for technology companies because a lot of them look at the United States, US market runs on over 100 IPOs a year. So there is, on average, at least 10 IPOs a month. And technology is about 40% of that market. So year to date, there's been 42 IPOs of technology companies in the United States, and we have done 22 of them, in the majority. And you compare it to Europe, it would have been maybe 7 tiny IPOs in London on AIM, like really, really tiny. 9 on Euronext, but of course they're not comparable in terms of size and scale and how global those companies are that come to market. So we're talking about a completely different volume of the market and the depth of it, and therefore the ecosystem needs to feed on something. So what I think we do need, by the way, to encourage the development of the European ecosystem is probably more concerted thought leadership, working together, and not concentrate on free float requirements, which is not going to do anything for the European market, but encouraging the people who, including in finance, who are switching jobs and finance industry is falling apart, if you like, investment banking, to become technology analysts, to follow, to do things, of course, and seek the success stories, which are very far and few between, but you can pick and build on those.
Right, yeah. Right, well, let's encourage some of those financiers to go into technology companies, shall we, by talking a little bit about product. Many of these people here today and out there on the video stream, live stream, are interested in what you guys would like to invest in and what you really want to see. So let's go through, all the way through. Let's start with you there. What are you excited about? What are you investing in? What products are you really fascinated by? And of course, the theme of the conference today is Internet of Things. Perhaps you have a view on that.
Right, so, well, let me enlarge the concept of Internet of Things already. Not like it's not big already, but we are really looking at it as part of what we call the industrial Internet, which really encompasses how the connectivity of things and people and processes can really revolutionize really deep in the next few years, everything we do from production, transport, consumption, and joining the different areas of life science and IT.
So such as things like hardware linked to health, medical tech, and Nike fuel bands, stuff like that.
Also, for example, there have been a lot. We also invest a lot of money and a lot of time in things which have to do with resource efficiency, formerly known as clean tech, which and electronics and so. And the LED world is a world which is going through tremendous changes. It's a huge market, and there are some fundamental engineering changes there, but having programmable LEDs allow you to totally change the way you're going to look at agriculture and greenhouses. And then you can actually program that totally differently from today.
So the marriage of software and hardware. What about you, Jeff?
So we never set a percentage per se, but if I had to guess, I would say we do 20% B2C, 80% B2B right now, which is quite a shift from our previous 80% B2C, 20% B2B. Yes, we've done Fitbit, we've done Ubly, which was on stage yesterday. So we like the concept of connected devices. We like to build infrastructure. So mobility infrastructure is something that we've done quite a bit of. We're fascinated by the ability for SaaS tablets to disrupt entire sort of industries. So we've done Farmaround in Croatia, of all places, because they do a SaaS back office solution for the farming industry. So we're looking at a lot of B2B, unsexy, making money solutions in very, very large markets that typically entrepreneurs don't want to copy once they heard someone was actually doing it.
Albert, do you have a view?
Well, from the public markets perspective, we have seen the rise of enterprise. The 40% of our technology IPOs have been in the software space, another 15 in services, another 15 in communications, and interestingly, 8 out of the top 10 best performing IPOs in the United States are from enterprise, effectively, this year to date. So that tells you, I guess, a story of the market appetite out there in the public markets.
Bernard, what about Balderton?
So first, we're very excited about a new investment that we announced yesterday in a company called Qubit, which is a company based in London, started by ex-Google people, who is focused on website optimization, conversion, personalization.
It's very big data oriented.
Very big data oriented. It's all about how they manage and analyze information to make consumer and website much more optimized than before. So that's an exciting area. We're very happy to have done that. We're very excited by the Internet of Things. I am personally. I think it's an enormous opportunity. We're just at the very beginning. What's exciting, in my view, in this is that it offers opportunity in applications, but also obviously in the infrastructure to make it work. And there's a lot of initiatives, a lot of companies working on these two sides. It also breaks sort of the idea that the internet is on 3 or 4 screens, the mobile and the tablet and the PC and the TV, and now you're going to have a lot of, you're going to have an infinite number of displays, whether it's the mirror in your bathroom or it's the your armband or something. So we're going to have connected information also everywhere, and I think it opens up to lots of different potential great companies.
So we have software and hardware marriage, enterprise. We have big data as a theme. What else, Megan?
It's really hard to overstate the importance and significance of mobile. Every human activity, every human behavior is being reimagined through the prism of a mobile device, and that includes how we interact with the environment around us. And mobile ubiquity is really one of the key drivers to the theme of this conference, the Internet of Things, because it acts as a hub, it acts as a proxy for identity for each and every one of us. And so when you're walking around with a connected identity, you can make the environment around you much more responsive and much more predictive. So we're investors in Nest, which of course, as Tony talked about yesterday, is a very intelligent way of making your house more responsive to you just simply through your mobile device. Same with Jawbone as well.
So go ahead.
I just
wanted to come back to your initial question on the future of VC. When you think a bit about the depth and the width to which this collective group of people here on stage is exposed to on a weekly basis. If you are an entrepreneur and you are really world class in what you are doing, wouldn't you like to have the exposure to that much knowledge and real-time knowledge? I think that's why we have despite the love-hate relationship that everyone
it's not
has with
over
us,
for you just yet.
It's going to take
Jeff.
a while.
Yeah, I just wanted to comment on, B2B is actually much larger than the pure enterprise software as we have thought about it in the late 90s or early 2000s. So it's actually a really massive stack which entrepreneurs can build and extract a lot of value out of. And there's this thin layer that we used to call B2B4C, which is something like SendGrid, which sends billions of emails now every month, and that's something which is very exciting, growing very, very fast, but it's still very consumer-oriented at the B2B layer. So that's why we're excited by this sort of depth of things we can do there.
What's very finally, what's really exciting you guys right now? What's something that you may be using, a product you're using, or even an app or a service that you think that's kind of pretty cool? What do you think? Go.
Well, I still think Spotify is the best way to listen to
Spotify.
music.
Spotify playlists. Jeff?
I think 4 years after investing, I'm really happy that Fitbit was here for the first time, and they were sort of the leader of a new sort of market that has become this connected, internet and sort of this movement where people sort of care about the data they generate and aggregate so they can know themselves better from a healthcare perspective or, from a personal knowledge perspective.
Are you using it yourself?
Sure.
Is it helping?
Well, I've lost quite a bit of weight since I started wearing my Fitbit, yeah.
There you go. In product endorsement now, but what are you excited by at the moment? The iPhone 5? Don't say the iPhone 5.
Yeah, we see a lot of companies in Europe, and they're all exciting because, of course, as IPO candidate, you will have to be a very
no,
exciting
but what product? What do you use? What do you like? What's a good app?
I agree. Spotify is a
Spotify?
is a
Getting
great
some
product,
good good vibes from Spotify. How about you, sir?
So an app that I like it. Well, a number of apps around fitness. I think they're really good. Now you can, with your mobile, you can track what you do, how much you run. You can have a coach. You can have all sorts of things. I think it's really fun.
What are you actually using?
I'm using this thing called Fitness whatever.
It's so memorable.
Yeah, I don't know. It's Fitness something, but it's actually quite good.
You're selling it really well. Huh?
No, I don't care. I'm not here to sell. I didn't invest.
We'll have to check.
One other thing I'd like to say,
You're fit for life.
It's what's it?
Use it once and you're fit for life.
Use it once, it just completely shrinks you. Megan,
outside of, I would
sorry.
just make one little commercial for a company that is not an app, but I think it's changing democracy in a way. It's a company that we invested in called Saito. It's a Spanish company, and what they're doing is providing software for internet elections, and it is one of the areas where internet has not penetrated yet. Most of the elections are done with either paper or still with horrible machines. And this is going to change when you see all the fraud and all the trouble going on. And I think this company, through an internet-based software, is bringing democracy now in places like Bangladesh and Costa Rica and Kosovo. And that's one of the investments that I'm the proudest of, because I think it goes beyond just a growth story or a profitability story.
Finally, Megan.
Well, in keeping with the theme of the conference, and I'm a simple girl, I really love my Nest. If I can install Nest, I guarantee you anybody can install a Nest. And it provides comfort and sort of personalization to my home in a way that just was never possible before.
There we go. We're all voting with our feet, our getting fit and keeping warm. But perhaps let's end this panel on the theme of perhaps changing democracy and enlivening democracy. Certainly as someone who's traveled a lot in the Middle East recently myself, I'm really quite excited by some of the companies coming out of even places like Beirut, for instance. So anyway, thank you very much to our panel. Ladies and gentlemen, thank you very much for listening.